There we go. Okay. I think we can get started. So, first of all, we wanted to welcome everyone and thank you for joining. Um, Most of you know us, but we'll do the brief introductions for ourselves. So, Nelson, you're looking at the two founders of this organization. My name is Nelson. I'm founder and CEO of the company. We started this, interestingly enough, going back to when we started this organization. January of 2020, which in light of the current economic times was a rather interesting environment to be launching a new company in. Because we decided 3 months before a global pandemic is a perfect time to launch an organization that helps other organizations grow and succeed. So we'll highlight some of those similarities and differences as it relates to navigating today's environment, as well as share a whole lot of what we're going to be covering today on how we drive success in organizations, but more importantly, how leadership needs to be thinking about navigating the current environment. Holly, some brief introduction.
Yes, of course. I'm asking Erica to unshare so you and I can have that conversation. Erica, thank you so much. Yeah, Nelson and I now almost 5.5 years ago sat together and said, how can we do this better? And we were super, super excited. And on March 17th, Nelson, or 19th, or some date that I should know by heart, COVID hit. And I think over the last 5.5 years, every year we've had something exciting to talk about. And this year we thought we'd actually put that conversation and share some of the findings with our, clients and what we've navigated over our careers and in the last 5.5 years. So I'm Holly Fardy. I am the co-founder with Nelson. And 5.5 years later, it is a privilege to be here speaking with everyone.
Thank you. So we know today's environment is complex. So we wanted to create space for a conversation, not a lecture. I don't know about most of you attending, but I'm not a big fan in general of the online presentations by and large. So we're going to try and make this more informative, more interactive, and more of a conversational style instead of simply a lecture. But what inspired this conversation is we're getting asked on an almost daily basis what is currently going on and how are we actually, what are we seeing? What is our perspective for the organizations that we serve? We're running in about 28 or 29 different industries. And as we joke with many, that number seems to keep growing because they keep making up new industries. So we're
Yes.
working with companies, large and small, who are all navigating the impacts of this. And so we get asked many, many questions about it. And the more and more we get asked about it, the more we realize this is not something that just our clients are facing, but this is something the economy at large is facing. This is something the world at large is facing. How can we share the experience and expertise that we're currently working through and supporting our clients with more people as we keep getting asked more and more questions about this? And that's what kind of set off and inspired this conversation we're going to have today.
Yes. So we're going to talk about, this is the welcome. We're going to talk about like tariffs and what are some strategic responses. And you can read all of these, some economic signals, the leading indicators, or are they lagging indicators? We'll talk about some operational resilience and what we mean by resilience, and of course, leadership, which is what many people in this room today have leadership positions. And what is your role and responsibility actually? I think we're going to go to the next slide, but before we do that, I want to intro it because what you're going to see is what in my generation we used to call memes. Erica, this is my kind of meme. If anyone remembers these, you don't see them on Instagram and social media, but they used to say a lot. They were quite profound. And we found a few of these today to just bring throughout and bring some humor into the conversation as well, but also some reality. Because I think this is we're starting in this economy. And really, I don't know when in my lifetime and career we didn't say in this economy. It's like this new generation kind of conversation, right? So that's what we're going to talk about. We're going to talk about today's flavor of the day. And let's start with the strategic responses to tariff pressures. And so what we're going to do is, how is this actually impacting you? And what are the components, pricing strategies, profitability, how to proactive ways that we can solve for it if there is a need to solve. And now Nelson and I will just chat about it.
So, I mean, I think it's pretty clear, tariffs will impact supply chains. So the how of it obviously is and makes it much tougher and a lot more expensive to get your products or to get the products at the pricing that you or the cost that it had as recently as 2, 3, 4 months ago. So there's definitely a direct impact for the organizations who are bringing in direct products, but this is and has already started rippling through different industries as well. Everything from the freight forwarding companies that bring these in to the service providers who are now working with these organizations. This is not an isolated or separate incident that's only impacting a certain subset of the economy. The ones who are facing it directly know they're facing it directly. They're already navigating these pressures, and the ones who are facing it indirectly, they're beginning to see this, and we believe this will have a ripple effect through almost every organization in some way, shape, or form. So, from our perspective, it's recognizing that this is what is happening. What are we doing about it? Or what should we be doing about it? As leaders of an organization, how should we be thinking about this?
What I love, the reason we're really having this conversation is when Nelson and I sit in a room, or if we have our strategic planning session yesterday, people always think we're not aligned, you know. But actually, I've never worked in my career with anyone where we're actually intuitively and instinctually aligned. But it's so much about our style and approach and how we solve that issue. We both do it from both, whether it's top down or bottom up, whether it's vision or operations, we both have strengths there. But my strength isn't in, okay, so how do we actually put this into action? Right. And this conversation is about, we're going to do broad strokes, and then we're going to give you some examples. And you'll see the challenge that we have in the conversations of coming to a place of understanding, we're hoping is going to bring some value to you. So that's the setup of the context of the conversation.
So, when we're seeing this come up, the conversations we're already beginning to have with our clients, prices increased, one of the most common things is should I or when should we be increasing the prices or cost of what we're actually happening over there? And it's one of the common questions because obviously those impacted directly, are facing this directly. They're the ones who are already seeing the pressures. So one of the questions that we come across, Holly, all the time is when should we have raised prices?
Oh, the old answer is always,
We raise prices.
always. Costs are always going up, and we should always be looking at our pricing. Now, is it to increase our prices? Yeah, on which customer segment, which portion of our customers, on which products? I mean, it's so interesting. The question is, should we increase our prices? Yes. The answer will always be yes. But where? Why? To whom? Those are the questions that you need to be asking. But if you ever think, is this time for a price increase? The answer is always yes, to me. And I don't know if that's how you would answer it, Nelson.
Well, anytime we're thinking about it, it's always important to recognize is why do we think price increase is a solution to it? And yes, I am 100% in agreement that if you're going to price increase as a solution, then there's an underlying problem that probably needs to be addressed. And yes, you definitely should be increasing prices as well. But when it
Exactly.
comes to this scenario,
Sorry, I want to share a story. We have quite a few Vistage chairs on this call with us today, and other peer group leaders with us. And I want to share a meeting I was in about 6 years ago. And I went to the National CEO Vistage Summit. And there was I think it's ITR, Economic Trend, there was so many great thought leaders there. And we are all sitting in a room of CEOs. And the question was, who has thought of raising their prices? And of course, all of us raised our hands, and then it said, which one of you who has raised their prices? And a handful of people raised their prices. This is around pre-COVID almost. And it was so interesting. He said, session ended. Leave here right now and go raise your prices. And this was 5 years ago. This was 5 or 6 years ago. So it's back to that question, but I know you had a question that I interrupted. So please.
no, but that goes back to again, when are we raising prices or what does that really look like? I think it's important to recognize, to understand the implications of, and this goes back to when we're having conversations with organizations who are trying to navigate this directly, the specific focus becomes you have to understand the impact of your costs. You have to understand the impact of your price increases. It's easy to sit in a room on a whiteboard and say, yep, we're raising prices 15% because this is what it's going to cost us more. But for some of them, it becomes okay, to your point, Holly, which customer are we raising prices on and when is this going to happen? How much of the decisions that we need to make can we pre-plan versus simply reacting to it when it happens? And that becomes really key in giving leaders and organizations the power to proactively decide instead of waiting for something to happen that they need to react to.
Yeah, exactly. So I know that you and I had talked about this, and we were saying, what can we bring that would bring some attention and some real life impact to it? And I had a couple of slides prepared to talk about this because it happens to be a brand that I care about. And it happens to be in my career, I've spent about 10, 15 years in luxury products. So I'm interested in it. But here's a really interesting case study that we're going to share with you, and it's the Hermes brand case study because it's so fresh. And so what happened is, if you go to the next slide, Erica, thank you. So this was announced. Of course, 15% was announced, 25% was announced, many things were announced, right?
145% back to 30%.
140. Yes, yes. But there's an outcome here. This was not some willy-nilly, the how can we reduce the US trade deficit? It was the reason for it. It wasn't just tariffs or this. It's just we need to do this. So if you go to the next slide, please, Erica, you can see how Hermes responded to this. Okay. They immediately increased their prices. Immediately on March 2nd. And this was already, they had increased their prices by 6 to 7% at the beginning of the year. And when I have this conversation offline with other people, they're like, well, Hermes is Hermes. This is about disposable income. Hermes is still in a competitive environment. Hermes is still competing with all the other big LVMH and all the other big people. Okay, so let's go to the next slide, please. And this is what Nelson was talking about earlier. They had to do it. This was really, their costs are going up. And so it wasn't just a reaction, that 6 to 7% that they did earlier in the year wasn't just a reaction to tariffs coming. They did that. And then they did it in reaction and preparation for the tariffs. And if you would go to the next slide, please, it talks about their competitors who didn't. Louis Vuitton also did it. Okay, but Cartier's parent company, Richmond, didn't, and neither did the other two. So Hermes, and if you look at pull the studies here, of course, their profitability is up as well, but their sales went up this year while the others went down. So even the people with disposable income, were making decisions here. But what I like about this case study, and you can take off slide, Erica, what I like about this case study is that they were prepared not for resilience, for agility, for strategic agility. Because when I say the price changed immediately, like how do you change all the prices, all the tags, everything within a week in all of the stores globally? This organization is prepared to make agile decisions and execute with speed. So how do you do that when you're in a commodity business, Nelson?
Well, again, you mentioned the example of Hermes, but one of the largest retailers in the world just announced the same increases. We're going to be increasing prices in response to tariffs. Our costs are going to be going up. These prices are going to be going up across as well. And that was Walmart announcing this as recently as we'll call it several days ago, because this is an ongoing, currently headline attention grabbing back and forth, obviously on the debate side. But this is not just to Holly's point, this isn't just an Hermes ultra luxury brand doing this. This is Walmart doing this. The staples, the consumer staples world, everyone is doing this essentially across the board. Every organization which is planning ahead, they're all reacting this way. And what does that tell you if these two different brands operating at the entire ends of the spectrum are proactively doing this?
I think it's really interesting. And the answer to that is their tariffs are not just policy, they're pressure tests. So COVID is a pressure test. The Great Resignation is a pressure test. You have to really look back at your organization and see, are you ready and responsive?
That brings up the interesting question, Holly. How do you see this tariff environment compared to the previous, challenges business faced? We spoke about when we started this organization, obviously, and the challenges that we immediately jumped into. But how do you see this compared to those previous challenges?
Again, it's a pressure test. Are we ready for any challenges? To me, it's business as usual. Tomorrow it'll be another issue. I mean, it could be unfortunate political, it could be war that would suddenly create uncertainty. It could be COVID. It could be it could be so many things. I'm going to go back a few decades right now. I was working in an organization, we were fast growing, and it was actually not a recession. It was a great time. I used to live in Hawaii, and people came into Hawaii and bought everything from Asia. And that created an issue in their companies that were running in Hawaii. They couldn't afford to compete, in purchasing. They couldn't afford to compete in real estate and leases. So that was the flavor then. And we don't even hear about things like that. It could be a good booming economy that's going to cause you, okay, these are pressure points. Are you ready to take action during pressure times of change?
Yeah. I mean, even just in the last 5.5 years, just to name a few, forget about anything before this, just to name a few. Again, there was COVID when we started, there was inflation, the rising interest rates, great resignation, supply chain challenges. That's just in the last 5.5 years. You
Yes.
want to go back further? Sure, there was a great recession, the dot-com. You can go back however far back you want, but there's no we joke about it as business as usual. It's the business as unusual. It's whatever is currently going on in the environment. There is no simple as everything is going normal, everything is fine. Every business faces this own challenges on its own trajectory towards growth and success.
Yes. Yes. Okay, so let's go. Let's go. We have some takeaways. We'll share this with you after. But so that it's not just a conversation. If you go to the next slide, please. Basically, reframe tariffs as strategic catalysts. Okay, be proactive over reactive cost cutting. Many people are letting people go and cost cutting, and that's actually going to hurt you in the long run. Okay. And let's talk about financial leadership as a service, which
But just on
is,
that second bullet point, remember,
yes,
if others are laying off and there's opportunity in these environments as well, if others are laying off, does that give you the opportunity to bring on a higher level of talent than you would otherwise be able to? On the tariff side, if everyone is trying to, offload or unload or minimize their orders, does that give you an opportunity to place a larger order and get a larger share of your market? All of these have opportunities, but you can only navigate these opportunities with the third point, Holly, obviously, when that's understanding and having the insight you need to make the decisions that you have to within your own organization.
thank you. Let's go to the next slide. So we are finding people are also doing this. It's called the wait and see strategy. Right? So let's go to the next slide, Erica. Okay. So let's take some action, right?
So, economic indicators is one of the things we discuss a lot. I mean, yes, we read all the headlines. Yes, we read all of those. But I think when it comes to straight economic indicators, my favorite expression is the one that my favorite quote, and I've used this in our newsletter, and I think my entire team has heard me say it often enough. When it comes to economic indicators, an economist is an expert who will know tomorrow why the things they predicted yesterday did not happen today. My point being, there are always indicators pointing somewhere. If you actually want to historically, you'd want to think about how going back how accurate every single one of them are. The numbers are pretty scary on the level of accuracy of where it actually exists over there. So when we're talking about economic indicators, it really is how does this, what are the things that we need to be aware of? What are the things that will impact us directly? And how are we figuring out our path forward as an organization? How are we figuring out what we need to do to drive this success? So yes, there's inflation changing on a monthly basis. We're seeing different ones. Yes, the interest rates, obviously, what central banks are doing around the world. So it varies. Yes, the U.S. is holding one policy, some or others are doing differently. what Holly already referenced, though, companies are beginning to lay off people faster or holding off on their hiring. So all of these are indicators for the economy as a whole, but ultimately you have to translate this to what this means for your business directly and both the opportunity and the risk that you'll be facing in this current environment.
Yeah, absolutely.
So again, Holly, going back to that point we just referenced, we get asked about this a lot, but way too many leaders are stuck reading headlines instead of their own numbers. You get stuck with the headline and assume that this is generally going to apply to them. How are our clients reacting to recent trends?
I'll tell you how I reacted. How about that? Don't apply to me. I don't sell anything.
Yeah.
Right? It's total lack of knowledge. Well, what about our hundreds of clients who do? How does it impact them? And I believe, like everything else, and the role and responsibility of a leader is to also be in touch with macroeconomics and macro indicators that impact your business. So the head in the sand strategy, or that wait and see strategy of our meme, of our little cartoon, really doesn't work. I love this as an indication that if there's an opportunity, because every time something changes, it is an opportunity for us to go back and say, are we doing the right things? Is our business model right for this market? Have we negotiated with our vendors? It's just that reminder that, do we have the right inventory in place? Is there a way to prepay and purchase early on? What is the next thing that's going to happen when this happens? Or people are going to, because there's uncertainty, think the tariffs will go away and stop actually bringing products in until tariffs go away. I mean, there's so many questions that we can ask that would relate to each one of our own specific organizations. So what to do and what to think is to do and think. And instead of saying, well, this doesn't apply to me. Yes, it does. It does, because there's that butterfly and ripple effect that makes it apply to you.
So just some specific examples we're seeing, and Holly, like I said, I'd love you to share some of those well from your conversations. We're seeing one company go buy a competitor currently in today's environment right now. They're in the middle of actually negotiating an acquisition currently. They recognize it. They've been built up. They built up a strong enough, organization internally that they now see this opportunity to go buy. I mean, yes, this is aside from those organizations that, have considered nearshoring their own operations, and this really, said, okay, now we really need to do this, and they're obviously taking much faster steps. But those are some of the companies in the direct, facing direct pressures of this environment. But Holly, what specific examples are you seeing companies do now?
We have a nonprofit organization. Actually, they are a for-profit organization doing consulting to nonprofit organizations. And we thought, oh, their business is going to stop completely. And they were ahead of the curve in conversations, and they're actually having one of the best quarters they've ever had, because they went in and said, let us help you how to solve it. We have organizations that are hoarding cash, and instead of spending, they're not investing in the future. So now cash is everything. It's one of our takeaways. It's your leverage, and it's going to be everything. But please, instead of cutting costs and hoarding cash, really look at resource allocations. If you are hoarding cash, why are you hoarding it?
I was
How are
going to
you?
say, let's clarify what we mean by when you say hoarding cash. Is it hoarding cash because you're sticking your head in the sand and that's it? No, just collecting all the money and ignoring everything that's going on, or is this preparing and shoring up your organization so you can succeed and to take advantage of opportunity?
Yes. And back to your point, just earlier this week, someone said, "Oh my gosh, everybody is selling." Actually, it was Ryan from our team said, the economic thought leaders are saying, "Oh, the recession is coming in 2028," which, by the way, it was coming in 2008. It was coming in 1998. And
90% of economists polled in Bloomberg said 2022 we were going to be in a recession by the end of the year. 90%. And
yes,
90% of economists were wrong that year because we actually had an up year that year, that organization. Going back to my quote from earlier regarding economists.
yes, yes. So everybody's preparing to sell. The boomers are preparing to sell. And the joke is, but no one's buying. Everybody's selling and no one's buying. And that is not the case. People are buying, they just want to buy at the right price. So your cash could actually help you be in a position to buy when the opportunity comes into play. So that's one of the other things that organizations are doing, is really managing resource allocation, especially when it comes to their cash. One of the other
So,
things that they're, yes, go ahead.
no, please.
One of the other things they're doing is when we do strategic planning for organizations, we usually have 4 or 5 areas of strategic planning. So it falls into buckets: sales, operations, marketing, and brand. So you don't have to do all of them right now. You can do one of them well, faster. So usually it's a 4-quarter process, but you can actually say, okay, there's this strategic initiative that we're working on to achieve by the end of the year, important and urgent. And that's one of the things that you should be doing, is really taking a look at your plan and not be business as usual, or, well, this is what we planned. We sat in a retreat for 2 weeks. We decided this was important to us. Well, it might not be important today. So I'm not saying not to do it. I'm saying you don't have to have 4 parallel lanes going. You could actually pick a lane and shorten the cycle to achievement.
And to that point, as much as I may crack jokes about economists, as CFOs, we absolutely read those charts. You want to talk a little bit about that? What that, how what we're doing with that kind of information to help organizations?
What's the question?
So we joke about, yes, I make fun of economists all the time, but it's not like we're ignorant or ignore the data that they're representing. So as CFOs, as financial leaders, what are we looking at for those?
To me, they're indicators. They're stress indicators. It's a very, very interesting thing that you can talk about. If your AR, your days outstanding, is growing, it's an indicator. We knew before tariffs that people were nervous. We knew before because AR days were extending. So it had nothing to do with tariffs, right? So those are the things that we're looking at. These ratios and numbers that we're looking at and key metrics that we're looking at, we actually do something with them. So what happens with our clients, we say, if there's an opportunity to move from a 30-day net 30-day to a retainer model, let's move there, because people are starting to change their behaviors. And that comes exactly out of a financial analysis of days stay out and days sale, receivable collections. I don't remember what it is, right? So that's an example of what we're looking at. Another one is, a lot of people look at their trends over a year. I will now change your trends and break it into quarterly trends. So because over the year you may be trending up, but over the last 2 quarters you're trending down, and people are not looking at that. They're still saying, well, we're 20% above January or March of last year. Well, no, your last 6 months you're trending down. So you can't use those numbers and compare to last year's percentage growth. So that's examples. Is that what you're looking for, Nelson?
Yeah, no, absolutely. Absolutely.
Okay.
And it's again,
Fantastic.
yes, we make fun of economists in general, but we don't ignore the data or the insight that we can glean from the information. We have to recognize the trends that's there, but more importantly, what does it mean for your company and how you take action on it?
Yes. So we're going to try to get through the other 2 sections here today as well. But we have
And leave some time for questions that
of
you might have.
course, of course. So here's some takeaways here. And we can also further talk about this, and we'll flesh it out for you before we send it out to everyone. Okay. How's that? How's that for our graphic? By the way, this is every day in Chicago. So in the Midwest, this is just our daily uniform. Thanks, Erica. Next, please. Okay. Let's talk about this.
So what are we talking about when we say resilience, and why does this become even more important now? I mean, I know this is a hot button topic for you, Holly. So let's dive into this
Oh
a
gosh,
little bit.
did I change color already? I do not like the word resilience and pivot. Do you remember during COVID, I would say, I'm not a ballerina. Pivot, pivot, pivot. Same with resilience. How about good business? Let's just have a good business with a good framework for financial management and growth. And I prefer the word strategic agility. I really, really do. And you cannot be resilient unless you're prepared to make decisions. You cannot be resilient. What does resilient mean? Like hunker down and just hold on tight? I really don't understand it. So maybe you should explain the definition of the word before I continue off on a rant.
No, I think that's important. People think about, organization, businesses that survive COVID, businesses that survive the recession were resilient. And I think it's important to talk about the perspective of what do we mean when we say this. So what, again, to your point, is it the resilience? Oh, they're tougher. That they can withstand the pressure of it longer. Is that what we're talking about when we say resilience in organizations?
No, resilience to me is preparation. So how about this? Let's just change that vernacular. Let's just change that language. When I grow older, I don't want to say I was resilient. Like that just means you had a hard life. You know, so if there's a takeaway today, it's let's switch that language and say, I'll survive this to I'm going to be prepared for this and the next.
Mhm.
Yes?
Yeah, that's good. And that's really what we're talking about. Resilience is not about surviving. It is about adapting to your point and that being able to adapt. And that's why what we talk about from our perspective as financial leaders, it is about starting with visibility. You can't react unless you actually know what you're seeing. You can't react unless you have that insight you need. You can't see your cash cycle. Again, to your point that you referenced earlier, when you start seeing the receivable cycle change. But if that's not something you're looking at regularly enough, then you're not going to catch that and be able to react fast enough to that. So it
Yes.
becomes all your pipeline. Again, if your day sales outstanding is looking very, very different time over time, you have to change what or how you're selling. And this is true whether it's professional services or product-based businesses. You have to recognize the indicators that are leading indicators in your organization. And what is considered a leading indicator in your organization may vary, but every organization should have leading indicators they're looking at on a regular basis.
It's so interesting to me when we were talking about this. It's really about you and I talk about data, information, knowledge, insight, execution. And I love one of my favorite quotes that you say, Nelson, all the time is, so you're getting your reports, do you know what those numbers should be? Do you know what those numbers could be? You talk about that a lot. Let's talk about something that, as we're talking about tariffs, we don't talk about that's absolutely business and game world changing, that we all talk about it. I don't think you're going to share you have a really fun ism about AI that if anyone wants, you can call Nelson privately and he'll tell you his thoughts on AI, which is actually quite brilliant. And I've shared it, and many people are sharing it with people about how we use AI and what we know about AI. But information, we're saying be prepared and have information. AI is changing that. You have a question about tariffs, you can go into whichever format of AI your company and organization is using. And hopefully you have an adoption strategy within your organization to use AI. Because if you don't, you're literally using comic strips instead of memes. Right? So you're dating yourself and you don't have access to information. The issue here is then what do you do with that information? Right? And that's where now you have the data and you have the information. What's the knowledge as it pertains to your organization? What is the strategy and the strategic map that you're going to tie and actions that you're going to take? Who are the people in your organization, the talent that's going to know what to do with that information and be able to read the leading indicators? And I think that's the type of preparation we're talking about when it comes to resilience. Use AI, but what are you doing with it? And can you interpret it? Do you know how to apply it to your business? Because what's happening right now is the rabbit hole of information. So now we're saying be prepared, have information, and people are just in AI iterating. Yes, yes, I would like you to take the next step. Yes, yes, yes. That's what's really happening. And then what are you doing with it?
And I
So
think that is really key. And that becomes, what does scenario planning look like in your organization? What decisions can you pre-plan? And this goes back to not resilience or not survive, but actually thriving in this kind of environment, even in this kind of environment where if you're looking at this, okay, tariffs are going to be in one of these, one of these two, three, four different buckets. Great. If you already know where essentially these rough buckets are going to be, what decisions can you pre-plan? If you're, for instance, if what you're selling has now changed drastically in what you're selling or how you're selling it or how long it takes you to sell, great. Are you going to wait to make that decision? Because, oh no, in a few months it'll be back to normal, which is one of my favorite expressions in business. Back to normal. There is no normal and there is no going back to scenario that happens beforehand. So what decisions are you pre-planning now so you are prepared? And sometimes those decisions will be tougher. But pre-planning them now makes it much easier to execute when something happens instead of waiting and then saying, oh, now I have to make a decision and figure out how to execute on it when something happens. For instance, no one knows specifically where tariffs are going to be after the 90-day pause, and just for instance, because of the topic of the day at the moment. But everyone knows it'll be roughly within a few broad areas. So what are you doing now? What decision are you making now, depending on where that will end up as an organization? And these are some of the conversations we're building and the scenario planning that we're building and modeling out with organizations that we're supporting now. Your business right now is very different than it was when you started the year. Great. How different is it? What decision do you need to make? You can't wait for things to get back to normal. You have to be moving forward.
Absolutely. And I know I see some great financial leaders on this call as well. The way you structure your scenario paneling, that sensitivity cells that you put up there, is so key because you can actually say, what if we grow by one? What if we grow by three? What if we grow by nothing? And something really interesting happens. I was working with a client on this, and we said, what if we grow by nothing? Everything was okay. It's surprising that if you have a good, solid business, that growth by nothing wasn't death. I think Simon Sinek calls it the infinite game. There's no winning. That number isn't a winning number. You don't make it if you make that number. So you may not grow revenue wise, but if we're being smart about it, you can still maintain net profit. You can still grow your margins. You can do a lot of other things there as well. So thank you so much for reading our mind. And that's where it comes to build a profitability that bends and not breaks. And with the third bullet there. But we have some takeaways for you here. And we talked about cash and agility. Know your break even. If you don't know your break even, know your break even point. And then have some flexibility into those scenario playbooks. Really build a good modeling tool. Okay? Thank you. Favorite topic. And yours as well, Nelson. But it all comes down to leadership, right?
So, thank you, Erica, for that. Ultimately, leadership obviously has so many different definitions, some good, some bad. We choose to define it and focus on specific areas of it. But Holly, we'll start with yours. How are we talking about leadership over here in this stage as it relates to organizational
I don't remember
success?
what my prompt is, but I'll tell you something because it's so top of mind. It came up yesterday, and it was about leadership and being the servant leader. And I'm like, look, you're laughing. It's like I'm not the servant anything, right? I want to contribute. I want to have a beginner's mind. But the leaders that inspire me are the leaders who are curious, the leaders who it's beyond serving, right? They want to contribute. They're inspired by their team. They still are passionate about what they're doing. And that, believe it or not, goes from whether you're selling widgets to 3D printers. You can't see it. I'll bring it up front here. 3D printers, by the way, this Pro CFO Partners 3D printers. The leaders in these organizations are always looking for ways to improve and do better things. And to me, leadership is your responsibility, to not only follow your own passion, but also engage your team, articulate the vision of the organization, make sure that vision of the organization is attractive to the people in the organization, so they don't come up every day and come to work every day wondering what they're doing, and then solve the problems.
And I think when things do get volatile, such as they are now and such as they are well, again, seemingly almost daily for many businesses, the leadership component becomes even more important because providing that clarity, confidence, and the communication around what you're facing as an organization becomes truly key, not just to the alignment in the organization, but so that everybody knows where they are, what they're doing, and how they're and what their role is in the organization. So again, providing that clarity, confidence, and communication becomes truly important when things get really volatile. When it relates to our role as financial leaders within organizations, it becomes our job is not just to report the numbers, it's to lead with them. What are the decisions that we are making? What are the impact that we need to have? What are the things we're changing within the organization, the decisions that we're making to drive the results we're looking for?
I think that's really, really important. And of course, as former CFOs, we talk about the numbers, but let's go back to our earlier conversation. It's all indicators, right? If your team is not showing up to team meetings, that's an indicator, right? It's an indicator that the team is losing engagement. If they're scared, that's an indicator of what Nelson was talking about, confidence and clarity and communication, right? So it's really important as a leader to take a look and I believe take a step back. Take a step back and assess. And it's beyond the numbers. It's assessing your organization's health. It's in terms of the business health, the talent health, the market health, and that's the real role. And then empowering your team to be able to bring ideas to you and really using the synergy of the team. And then you're the ultimate decision maker. So I want to unpack leadership a little bit more, but I'm going to wait for your next question and prompt.
So, it's funny when we talk about this, what are those decisions that get made throughout the company when they own their financial clarity? What does that really look like in some of these kind of organizations? Again, if we have some of the specific examples across different industries, we work with so many different ones and so many different size companies. And in your own career, you've worked with even larger ones that are, across even more interesting environments as well. What does that look like when you have that clarity? What does that look like to be able to drive those decisions?
I mean, because you took me back to my own career, I suddenly felt when I wasn't the leader, and I suddenly became the CFO who was feeling with the leader, right? Let's park people who really can't make payroll right now. They're in crisis mode,
Yeah.
right? We're really talking about organizations who are in health mode, and the ones in crisis mode, I can't have this aspirational conversations around, right? We need to put out the fire before we can rebuild the house. But I'll give a real life example of, in the last recession. What happens when your clients are just not shopping? And you have talent that you don't want to lay off, you have the means to keep them. How do you refocus that talent? And that's so, so important because in this organization, what we did is we were hostage to our largest vendor who manufactured our products. And in this organization, we refocused our talent into R&D and developing our own product line. So the people who are expediting and buying products from vendors started sourcing builders. The people who were designers and working on customers started developing new product lines. And when the recession ended, we already had a suite of product that was operationalized, skewed in the showrooms, new products to go to market. And when people started buying again, they had something new to buy. And that's an example of that leadership, that instead of panic, they innovated.
That's really true. I mean, if you stay grounded and future focused, your team will too. And that becomes so important when navigating, we'll call it turbulence, even though we'll call it business.
Yeah, I want to be a business owner, not a turbulent owner. Turbulence navigator. Right.
Yeah.
Yeah.
That's definitely true. But that's what we're talking about when why leadership is so important and the clarity leaders need to provide their team becomes so important, especially when things get volatile. Because it's one thing for a leader to feel confident or uncertain, but how they're communicating and rolling that out to the team is truly crucial in this environment.
Nelson, I think one of the greatest gifts of our partnership is as partner in a leadership. You very early on in year one saw what I needed, right? And send me a book here called Hustle and Float. And I can't say his last. You remember that? And
Sure.
I of course it had been my career, but definitely as a business owner, it's been part of uh, the cadence of how we work. I think that's really important here. As a leader, if there's one takeaway today, is get rid of the static. So we're saying watch indicators, be aware of macro, look and watch all of the numbers, take in all this information. But we're saying that, remember, hustle and float, but turn off the noise. So it sounds like I'm speaking from both sides, right? And saying, take all this information, make decisions, use insight, go to AI. But I believe and I act on what you need to do is remove the noise, right? Get still and really focus. Get rid of the static. And that is the word tariff. To me, tariff is static. Tariff is just a pressure point. Okay. Hey, it's a reminder. It's that rubber band on your wrist. That's how I would use the word tariff. Okay. Here are takeaways, translate financials into actions. That's the book. Hustle and Float was Nelson's way to help me create calm through clarity. Find a good partner, by the way, if you model adaptability and not perfection. Okay. And we're not saying don't have self-doubt. We're saying your team needs to know that you're in it with them. And that's the confidence they're looking for. Okay.
And just one of those warning signs, yes. Which is why we
Yeah.
like telling these.
Yes,
Yes,
yes.
ordering lunch is important, but you can't avoid the long-term planning. You still need to go through you still need to figure that out. Again, the clarity is important. How you're communicating that clarity is important.
Absolutely. Okay, so here's what we're talking about. This is a great reminder to take the time to prepare for the next level. Okay, we have some how-tos for you, and we'll further expand on this before we send it out. And you can all read this, so we won't read it. We can change the word resilience again. Okay.
But
Uh,
we also go ahead.
oh, here, there's a couple of other things before we open it up to Q&A. This is what we're talking about. We'll continue to make predictions. Very different from forecasting and modeling.
Yes.
Okay. Very different. And this is not something new. I went and I could have found these in 88 and 91 and 2056. And
Yeah.
so this is not anything new.
This was a headline somewhere in 2023. The point is this is
Oh,
nothing new.
no, it's nothing new. It's nothing new. So let's
But
go back. Yeah, take
let's
off
open
the.
it up to some questions. You know, we covered the four themes of what we actually set out in the beginning of the stage, but we wanted to get to some of your questions here. And we have a few, and we'll try and address as many of them as we can here. But
I'm
Holly,
having.
first question, what should you do right now? This is one of our questions. What should you do right now?
I hate it when you ask me the question first. You know. Well, I sit in the seat of a former CFO. One of the things that you can do right now is get the information that's inside of your company right now. I would start there. And where am I right now? I'll give an example of it. People do cash flow projections. People have a cash balance in their QuickBooks. or Sage or any ERP, but they actually don't know how much cash they have. Okay. How much cash do you really have? How much, not just cash flow projections or a cash
Mhm.
flow model, but how much cash do you really have? What's really, I don't want to know your revenue or a revenue projection. I want to know what's in your sales pipeline. Are your clients healthy? So let's get down to the business basics and find those things out right now because those are easy. You have a team that hopefully can help provide some of that information for you or get some skill. If you're missing that skill set, get that information from someone else. So that's first thing. Now I'll pong it back to you.
The next question of, will this impact my business? Okay. So my response is absolutely, this will impact your business. I do not believe there is a single sector or type of business that will not be impacted in some way, shape, or form in this environment. Again, whether this is direct because you're dealing with products that are impacted directly on your costs, whether your clients are, your vendors are, somewhere along the way, this is going to be impacting it. And if you're looking for the questions or you're looking for the signs of this information is all over the headlines if you're knowing where to look for it. Again, this goes back to not ignoring the data that's in front of us. If auto dealerships are struggling on this side and your entire business is marketing for auto dealerships, yeah, even though you're not selling a car that is impacted in any way, shape, or form, your clients are, and therefore it's going to impact what they're going to be buying from you. If you're a professional services firm that's working with clients in any of these sectors that are facing it, it will absolutely have an impact. Again, going back to many organizations are just, whether they should or shouldn't, many organizations are putting a pause on many other new buying decisions. So if your business success is dependent on the growth of being able to drive new business, yes, it's your business is going to be impacted on your ability to do so.
Yes. Um, we have other questions. Have you seen AI being used to help companies prepare for tariffs and potential recession? Yes. We see AI solving dating problems. You know? Yes, but in real life, I mean, people are using AI for everything. Now, have we seen it done successfully? Yes. There's a real great tool in AI that you can use. When you're asking AI and you're doing prompt engineering, AI will go and wherever it goes, at ProCFO, we call AI Hal. Hal goes and looks up, and now it knows even more than what's out there because it's true machine learning, right? So one of the things that you can do is you can actually put your company's specific information in there and say, hey, I'm making this decision. First, ask the prompts on the decision you want to make on tariffs, for example, not potential recession. That's too broad. Say I'm getting there's an indicator that I'm getting a 10% tariff coming up. This is my company, my size, my revenue, put in some and say, what is the cost implication or the profitability implication if I delay raising my prices on 20% of my customer segment by a month? And AI will quantify that for you. Okay, so that's one of the questions. If you need any help with that, let me know because I've been using that kind of, I'm using AI for that right now to communicate actual opportunity cost and actually real cost because it's so hidden, the delayed decision making. For small but fast, what?
No,
You're gonna
please
go?
go ahead.
No, are you sure? Okay.
I'll take
For
the next one on there. I see it underneath it. Okay.
okay. Okay. For small but fast-growing business with strong demand but limited cash flow and not ready to raise external equity, what are some of the most effective and creative ways you've seen CFOs secure financing when traditional commercial banks aren't willing to lend due to age or lack of profitability? That is such a good and big question because now I'm going to be what drives me bonkers when I ask Nelson a question. Well, it depends. Are you willing to give up equity? You see, I mean, there's so many other ways that you can talk about it. But yes, of course, there's private lending, there's AR lending, there is family businesses, there is friends and family. There are many ways that we raise funds One of them, actually, that CFO is on the call, very, very brilliantly moved manufacturing warehousing to a state across the line, a few miles across the line, and took advantage of a state grant. So look at other opportunities that you have. You know, I hope that answered the question. So beyond
Or
financing, there's other ways to get capital.
or one other creative one, again, depending on how the product or service is delivered. I've seen one company carve out a JV to actually have it funded by one of their vendors to a certain degree, but at an early stages of a business without giving up equity in their actual core business. So you're talking
Absolutely.
about creative. There are lots of different ways to do this scenario depending. So the short answer is yes, it depends when it comes to raising, but they think out of the box. There isn't a single solution that says yes or no from any of these. So next
Yes.
question here. We sell commodities into the commercial construction space and have competitors like everyone else. We just received our first 10% tariff container from Taiwan, and we are raising our prices to our distributors on June 1st. None we know in our market is passing on the full 10% tariff. Are you seeing the same trend in other industries? And if so, how are they offsetting these higher costs? This is, if it hasn't hit your specific industry yet, that is directly impacted by tariffs. This definitely will. This is something many organizations are facing where they're facing the pressure and almost becomes a game of chicken is who's the first one to blink. One of the ways we're advising many to be proactive about it is, look, ultimately, your business model is very rarely set up to absorb the cost of obviously this increased side of things. So it really becomes what is your relationship with your vendors? And how are you actually getting in front of this relationship side to reinvest in those relationships to be able to communicate this back and forth? Most of the people you're working with recognize that this is going to be coming across the board. And then it becomes, this goes back to some of that scenario planning is, yes, you need to raise prices. Do you need to raise it to full 10 or can you do 5? Or if you are going to raise a 10, what else can you give your customer so they'll continue to buy from you on a longer term basis? This isn't a
And
zero-sum game, but it's recognizing that there are a few different factors to this rather than just passing along the cost in the
I
communication
want
with
to this was very specific and we're running out of time, so I'm sorry I interrupted. To the questionnaire, I see your name, but I'm not going to out you here. So, you don't have to raise your price 10% on all of your customers. The customers that you really value or long-term customers, you might be able to do a fraction of that. You can raise your prices 20% on some of your other customers. So they may not be raising it 10% across the board, but really do this strategically. There are customers that you may not even want, that you don't even know you don't want. Raise the prices on them. We've done this in the past. If you lose them, it's good. You don't want them. If you keep them, you're getting the margins to offset some of the other price increases. Okay. So I hope that helps because it's a real life example of what I've done in the past.
Yeah, we've seen this. Absolutely. So as we wrap up over here, we wanted to thank everyone for joining us. We want to be respectful of all of your time and not go over. We will send out the takeaways from this one to everyone who joined us. And we wanted to thank you for joining us for this conversation.
Thank you, Nelson, for joining me in this conversation. Bye, everyone.